Hello friends, for a couple of days we have been discussing in the group about the Trade Genie next option. Now this is a simulator platform through which you can also send orders to the exchange. One of the best part which I liked about this particular application was this tool called simulator. Now there is a strategy which may suit for the current market condition, what we call it as iron condor. That is when the markets are moving sideways. uh, like you do not have a bullish view nor you do not have a bearish view that the market is going to remain slightly bullish or bearish, but it is going to trade in a range. Now looking at this example of ICICI Bank, 1006 being the resistance, 921 acting as a support, we can think about deploying this strategy somewhere around 28th of August. Now, when we talk about iron condor, remember you are going to sell one call option, sell a put option, and you're going to protect it with another call and another put. So you can think about like selling 950 put, selling 980 call. But when you sell a call and a put, if the market goes up or down, the losses can be huge. Now to protect it, what we do, we buy 1,000 call to protect 980 call which we sold and whatever the premium we collect, and 950 put what we sold. To protect it, we are going to buy 930 put. 950 put what we sold, to protect it we are going to buy 930 put. Now the advantage of this strategy is the risk will be clearly defined. Whatever the premium you collect and the premium you pay, and the difference between the strike rate, that is 980 to 950, whatever is the difference, that will be your loss with the adjustment in the premium. Now we don't have to do all that manual calculation because that's where the Trade Genie app comes into play. So what you need to do, you need to go to the strategy, type the stock on which you want to test it. So let me select ICICI Bank. Now here you get by default all the premium. Now this, when you go, it will be showing you the current date premium. But I want to do back testing. That is where this tool comes into play. So I'll go to August. Somewhere around 28th August, we had identified the opportunity that the stock is moving sideways. See here, the market went up by 31st July. By 21st, it came down, then it pulled back, it didn't go up. So it's moving in a side range bound. So what I'll do, let's say on 28th August, I want to deploy this strategy. I will select 28th. Okay, this is the date. This is the expiry, which month you want to test. So here it automatically shows the premium which was applicable on 28th August. So 980 we want to sell. We would have collected around 19 rupees premium. 980 call, like right side you will have this call option. Right side of the screen you will have this call option. So 980 sell. Then you can click on the table, sorry, Greeks. It also shows you the delta. Ideally we should sell something like a delta with 0.15 to 20, but since the number of days to expire is only 30, we have slightly taken a higher risk and we are selling 0.32 delta, 0.32 delta. Now what we will do, to protect this, we will buy 1000. So put 1000. 980 sell, 1000 buy. Now we will be selling 950 put and we will be buying 930 put. So this is known as iron condor. So here the system only has calculated and has mentioned that max profit you will make is 8,015. That is when if the stock remains between 938 to 931, if the stock is anywhere between 938 to 991, then I will have a profit anywhere between 8,015. But if it breaks above 991, goes to 1000, or breaks 938, goes to 930, then I will have 6,000 as a loss. Now, max profit, when will I make? That is when the price closes at 971 level, because both your 980 call and 950 put will become out of the money, and I'll be making a max profit of 8,000. If it even closes around 978, I'm fine. If it closes at 950, still I'll be making a good money there, around 8,000. So what we will do now, we will see the back testing. The outcome of this strategy. So you need to click on the auto run, and you can choose, like if you keep tick by tick data, it will take a lot of time to complete watching that. So let's do one thing. Let's put a 30-minute. Like every 30 minutes, I want the price to be updated here. 9:45, 10:15, 10:45. Here what I do, I 1 second, 30-minute play. So you can see 11:15 ICICI price, sorry, 1:15 the price was at 972. I was in a profit of 420. Like it basically takes the historic, like you can see how the premiums have been changing in the market. 915 premium put was trading at half a paisa. So you can see 950 put, which we sold at 8 rupees 50 paise, is currently trading at 9 rupees. And 980 call, which we sold at 17, is trading at 11. So as the market keeps going down, the call premium starts coming down and the put premium will increase. But what you need to observe carefully is with the number of days passing, even if the market goes up sharply or goes down, your losses will be very less because theta will work in your favor. So with every passing day, theta decreases, which works in favor of the option sellers. Like the premium what people pay, it will have a component called theta, which is nothing but you're paying money for the probability, that is for the event to happen. So by 7th September, the probability of the event happening has reduced. So the premium starts going down. So here you can see 17 rupees what we collected is now trading at 10. 9 rupees what we paid has gone to 4.3. 8.5 what we collected is trading at 6. And ICICI is currently trading at 969 on 8th of September. So full day's price movement gets updated in this simulator, and it also calculates the profit and shows us. So we want to know what is our profit. So here what has happened, both call and put premiums have sharply come down, and we are in a profit of close to 280. That is on 12th September. But if you see 12th September, ICICI was trading at 985. So call option, what we collected 17 has now become 20, but put is working in our favor, so our losses are very less. So price has gone to 990. So here you can see we are in a loss of 280 to 525. Then you can see the price touched 986. We are in a loss of 245. Date is 14 September. So here if the price starts going back to 970 level, our profits will start increasing. So 990, it's not working in our favor. 992, not working in our favor. So 18th Monday, 12 o'clock, price is trading at 991 and we are in a loss of 630. But if you had seen on Friday, for the same price level, we were in a loss of 1200. That is mainly because of theta. Now see, price has gone to 982. We are in a profit of 800. Price came down to 974. Our profit has gone to 3500. So 21st September, price was at 968. Profit is close to 4000. Now, can we exit the strategy? Yes. If you want, you can log in and exit the strategy. Okay, so this is the final day, 22nd September, 245 or 315. The profit was close to 3600 and we could have exited it. So you can do this on any stock that you like. For example, Tata Chem. Select it. For example, I am bearish that it will not go above 1150. So I can sell this call. But when I want to sell, I don't want to sell it today. I want to sell it somewhere on 13th of September. So 13th of September, I could have sold October call 1150 at 14.50. Okay. 26th October is the expiry, 1150 call. I could have sold it at 14.50, 13 September, end of the day. Now let me run this. So every 30 minutes price it is showing how it is reacting in the market. So Tata Chem had gone to 19 because Tata Chem went to 1000, 66, 1072. Premium had gone to 21 and I was in a loss of 1842. Now 18 September, you can see the prices have started to come down. The premium will also come down. See, 20th September, you can pause it here. Price came to 1044 and this premium came to 10. So the gain is around 1900. Okay. Now play it again. The premium has again gone to 11 because the price went to 1043. Now the gain is around 3000 for 3000 because from 14 rupees the premium has come down to 9 rupees. So you can see the live how the premiums are changing in the market. Okay, 1032, 3700, 7.65. Now what I can do, I can also exit this and I can go ahead and look to sell something like 1100 call option. I can add this position here. Okay, so that we call it as a roll down. Thank you.